So this digital asset, if we just follow that adoption curve that we're looking at, they will get to a $200 trillion asset class, which is, we'll have never seen this happen by 2030. We'll have never seen an asset class that didn't exist come out of nowhere and be worth $200 trillion. So to think of it, what does it mean? Why should anybody care watching this? This is an entire asset class that's going up 100-fold. By the end of this decade. It's like one of the easiest ways to make money and prosper is to have a wave behind you, the wind in your sails. This is the biggest wind in your sails you'll ever have.
Well, we're going to stop breathing in a minute after what you just said. That's just crazy stuff. I mean, if it goes to that sort of numbers, we're talking Bitcoin will be worth millions of dollars a Bitcoin.
When I'm at Goldman Sachs, the Asian crisis happened in 97, 98. That was a crisis of debt, where all of these Asian economies had borrowed too much money and blew up. George Soros wrote a book about it called The Crisis of Global Capitalism. And he said, listen, this debt bubble is likely to transfer itself to the developed world. And he was right. And that there would be a crisis. That got me attuned to it. And I realized that the world was massively in debt, never been this far in debt. 2000 boom bust comes along. The debt crisis didn't blow up because they started cutting interest rates. Then we go to 2008 and we've transferred the bubble from equities now into property. And that brings down the world's financial system. And the central banks discover a new trick, which is we're going to print money. But also over 2008, we discovered some other things like nobody knows who owns what in this very leveraged financial system. You know, somebody in Lehman Brothers, nobody knew who owned all of these bonds and stuff. So I realized there was a problem with ownership, there was a problem with leverage, and the system was still not fixed. And then the debt bubble blew further. And I knew that by the time we got to the European bubble, it was now affecting major developed governments, Spain, Italy, France. And I thought, we need to find a way out because the governments are going to keep putting sticking plasters on it, printing money, debasing currency, and finding a way of not letting this deflate. And we know that the more you blow up a balloon, the more likely it is to implode. So I thought I need to do something about this. So I started researching building the world's safest bank, which is a slightly hubristic thing to do, but I thought I'd give it a go. And I went around the world trying to set up this bank, and it's hard. And I gave up. And a friend of mine tapped me on the shoulder and said, you looked at Bitcoin. This was 2012. He said, I think it's the answer you're looking for. So I looked at it, saw it very quickly. Blockchain allows people to store all of these assets and know who owns it. That solves most of the financial systems problem. It's also a better way, faster way of settling and everything else. And Bitcoin itself had this kind of limited supply that maybe it could be a store of value. So I wrote the first paper on it. That was a macro paper saying, listen, if you compare it to gold, with gold at $1,300, Bitcoin should be worth about $1 million. And I published that, and kind of a lot of people went, wow, we've never seen a macro research piece, because at the time it was like a geeky tech thing. I then bought it myself back in 2013, and it went up 100% in a month, and I sold it. I'm like, financial markets don't do this. Options might occasionally, but something's weird about this. It's a bubble, or I don't understand it. So then I left it again, and I rebought it. And then I held it all the way to 2017. It went from $200 to $2,000. I sold it. I thought it was a hero. It went to $20,000 3 months later. I felt like an idiot. But I was out, but I was very interested in the space, and then watched the whole development of the space grow. And I knew that the next recession, this force of debt and central banks and all of these open questions were going to get exposed all over again. So I became quite well known in March 2020, saying, okay, this is the time to go all in on crypto, because the only answer here is for the banks and governments to spend massive amounts of money. And it was likely to drive the value of crypto up, and people would understand the value of blockchain and what this could mean in terms of crypto assets. And so I've got heavily involved then, and have had 100% of my net worth, of my liquid net worth, in this space ever since. It's the fourth biggest ETF by inflow on day one in history. It's basically allowed the registered investment advisors who control the average person's savings access. It's allowed pension funds and hedge funds access without having to get special clearance. So it's a big deal. It's a very big deal. Now, it's not a perfect product because this one's based on a futures contract, so it can deviate from the price of Bitcoin. It's not great, but in terms of democratizing this great technology and the investment opportunity, it's huge, because now anybody can buy it in their Robinhood app on their phone in seconds without having to open a whole other set of accounts and figure out how you're going to store it and all the other stuff we all have to figure out. So it's big. You got to remember that China is trying to solve other issues. One of them is they have a closed capital account, which means you can't take your money out of China, because the Chinese actually don't have that much reserves versus the size of their economy. And if it leaves, they don't want their currency to come under pressure. And there's a lot of money in China. And they saw that the crypto markets were being used to get money out. So they just want to stop that. It's a control economy. They want to control the elements of what they want to allow and what they don't want to allow. They also have a leverage problem in China. There's so much speculation and leverage, particularly in the property market, that they've been clamping down on that in years. So first it was the shadow lending markets, then it was the bank lending, then it's the property markets. We've just seen that with Evergrande, and it's also crypto, because that's another way of accessing lending markets privately. So I don't think they're thinking crypto bad. They're thinking, we don't want our people to use crypto in these ways, so we need to stop that for now. I think it'll be back, but they just need to figure out how to regulate it better. I mean, and when you open that first door, you usually come in a bit cynical, but inquisitive. Of course. And then you walk into this new room and you go, wow. And then you think, hey, I've got it. I understand it now. And then you go, well, what's that door over there? You open it and go, oh my God, what's that? And before you know it, it's a maze, because you'll discover it's the biggest thing you've ever seen. So to explain this to people, the internet grew at 63% a year in terms of number of users from 1990 to 2000. In 1997, there were 150 million users of the internet. And as I said, it was growing at 63% a year, the fastest growth of any technology the world had ever seen. We all know that. We all talk about the internet. So here we are today in cryptocurrencies. They've also been around about 10 years. Currently, there's 150 million users, but the network is growing at 113% a year. So it's twice the speed of growth of the fastest technology the world has ever seen. We've never seen anything like this. And what this is the network of money, and it's exploding in size. It's a $2 trillion asset class currently as of today. If we look at the other major asset classes around the world, equities, bonds, real estate, they're kind of range between 150 and 350 trillion US dollars. So this digital asset, if we just follow that adoption curve that we're looking at, they will get to a $200 trillion asset class, which is, we'll have never seen this happen by 2030. We'll have never seen an asset class that didn't exist come out of nowhere and be worth $200 trillion. So to think of it, what does it mean? Why should anybody care watching this? This is an entire asset class that's going up 100-fold by the end of this decade. It's like one of the easiest ways to make money and prosper is to have a way